The clothing retailer Dynamite up dramatically today at this point. Is that because of its Q4 earnings?
It most certainly is, Marilla. So that's right. Groupe Dynamite, the Quebec-based retailer, briefly had its biggest intraday gain of all time as shares moved up by over 14% today. It was also able to reverse a lot of the losses it suffered throughout the month of April. And like you mentioned, it mostly comes down to a mostly positive fourth quarter earnings print as during an uncertain economic environment. So the retailer reported adjusted earnings of 23 cents per share. That came ahead, just narrowly ahead of analyst estimates there. So we've also seen some double-digit gains in revenue compared to last year, and same-store sales gained by nearly 10% compared to a year ago. There are also other interesting standout details in this quarter, like management providing 2025 guidance at a time when a lot of companies are opting to just not put their outlooks at all, given the amount of economic uncertainty out there. So Groupe Dynamite now expects that same-store sales will grow between 5 and 6.5% in 2025. Management also argued that their stock was undervalued, so they approved a plan to repurchase up to 1.3 million shares. So just to give some more context for viewers, Groupe Dynamite went public in November, listing their IPO at $21 a piece. Unfortunately for the company, those shares did come down by about 40% since that time. A lot of it was due to the retailer just being caught up in this tariff tantrum that's rippled out throughout the broader markets. But for management's part, they were pretty optimistic that the balance sheet was pretty resilient there, Marilla.
Okay, so what has been the reaction then from the analysts?
Yeah, it's been a mostly positive reaction from the analyst community. You had TD Cowen's Brian Morrison saying that the fiscal 2025 guidance suggests that there's been a really solid start to the year with their expectations for single-digit gains in same-store sales. Though he did add that while the initial take has been positive, investors are probably going to be looking for more details on how Groupe Dynamite is navigating a tariff environment and this consumer spending slowdown. On that point, we had CEO Andrew Lutfi describing the company's strategy of raising prices by about double the industry inflation rate to keep margins strong. And he also argued that even if prices start to gain a bit, he's still pretty confident that there will be that store traffic that will keep consumers spending at those locations there, those Garage and Dynamite locations. They're also aiming to pivot the majority of their product sourcing from China to countries like Bangladesh, Cambodia, and Vietnam. As far as the pullback in discretionary spending, Luffy made the case on a call with analysts this morning that apparel really doesn't take up a big segment of consumer discretionary spending, and it's not the same as big ticket items like jet skis and cars. In fact, he said, in these recessionary times, often enough, a cute $30 top that puts a big smile on your face is sometimes just what it takes to get through the week. So maybe some retail therapy will help keep margins strong in an uncertain economic environment, Marilla.
Yeah, everybody can do with a nice $30 top, especially when you're worried about the bottom line. All right. Stephanie Hughes, thank you, Stephanie. Appreciate that.